Welcome to another series on how to backtest your chart, and today we are going to be doing the part 4 of how to backtest your chart. So it's been a long time I continued this series on how to backtest your chart, but I'm going to be starting it right now. So every Thursday I will be posting how to backtest your chart. Please, if you haven't watched the part 1, part 2 and part 3, try your possible best to watch those parts because it's very important. Alright, so I'll be teaching you how to backtest your chart, and today we are going to be backtesting USD card. So we are going to be backtesting USD card. First and foremost, I want us to this is just the recent price movement. This is just the recent price movement which you are seeing here. This is just the recent price actions which you are seeing here. So I want us to be going further. Let's just go backward and start from the past market movements. Let's just be going. Alright, so and also if you haven't watched my video pertaining to structural liquidity, so please try your possible best to watch that video pertaining to structural liquidity. Alright, so that video is based on the mentorship program, the advanced mentorship program which I'm putting. Alright, so I just post those those video for you guys to watch, because it's very important for you guys to watch it. Alright, and also we are also discussing about engineer liquidity and also inducement liquidity in the advanced mentorship programs. So but I'm not going to post the engineer liquidity or inducement liquidity because those videos are not mine, so they belongs to those who paid for the advanced mentorship programs. I only break them so that you guys can see the structural liquidity. Alright, I already break them so that they can give you the structural liquidity, but for the engineer liquidity or inducement liquidity, alright, the video is not going to be posted on YouTube. Alright, so I'll be hosting another advanced mentorship program which costs less, just $15 for you to join the program. It's not that much. Many people do charge $200, $300 or even $500 to just teach you an advanced class. Alright, and also the thing there about it is that I'm not the program. We are not doing we are not just talking. We are more of doing practical and just doing theory. Alright, so everything which I teach you is going to be, I will be showing you in the chat. So that is how we used to do it in the advanced mentorship program. Alright, so if you are interested, the registration date is going to be on 31st of this month. That is where we are going to the advanced mentorship program is going to start, and next month is going to be the next month ending is going to be the last day for the advanced when the advanced mentorship program registration will close. So let's go back to our videos. Please if you're new to my channel, don't forget to hit the subscribe button, follow me please, like this video, and also comment please. Alright, so that is the only thing you can only do to give me right now. Alright, so let's just be going further. Let's just going backwards, sorry. Alright, no matter how the challenges you are facing in trading, I want you to know that trading is not something that's easy. Alright, you can, sometimes it's going to be hard, sometimes it's going to be simple, alright, but it's not something which is very easy. You will be facing a lot of problems, especially psychologists, risk management, fear or FOMO, or even fear of taking entries. Alright, even fear of you when the trade is going to your direction, you'll be fearing not to the fear to go against you. Alright, so these are all fears, these are all things that which are in trading, but once time is going on, you are going to master it. But the main thing I'm going to also tell you is that you should always try your possible best to master what risk management strategy and also psychology pertaining to the psychology. In the advanced mentorship program, we do learn about psychology or in trading, and also what risk management in trading. All right, so I need you to make sure your psychology is right and also your risk management is right. All right, so I can always stop here at these points. All right, because if you can see here, we have a break or structure to the upside. This is a break or structure to the upside at this point. We also have another break or structure to the upside. Based on the strategy which I trade, which is SMC, right? So I can only trade from this other block, and I'm going to use it as what? Inducement zone. All right, so this inducement zone, this inducement zone, which is going to like sitting here. Now you can see how price do give the accumulation at this point. Price do give accumulation at this point before price take out what? Liquidity from this high which you are currently seeing here. And after that, many people will be looking, like me personally, which I do trade SMC. Remember, we have a break of structure to the upside. Now break of structure to the upside at this point. All right, before you can see how price just just hits it's up. Right, so sometimes in trading, I need you to understand that your setup may fair. All right, your setup may fair in trading. So after that, let us take this out. After that, our price gave us a market structure shift from here. So this is a market structure shift from here. I'll always make people marking here as a market structure shift, but I'm not going to do that. The reason I'm not going to do that is because here is an inducement level and not really that break, because once we use from this side, even though price return back, this is just an impulsive, yes, this is just a pullback to a demand zone here, and boom, to the upside. All right, so I'm going to use here as the general lower swing low. I'm going to use it as a general swing low at this point. All right, so we have a market structure shift. Since we have a market structure shift at this point, price did not give us a break. I want to show you guys something. Just the way you guys are marking at break or structure, and it's not really good. You can see this weak rejection break which we are seeing here. Most of you guys is going to mark it as break or structure. I don't do that. I can't mark this as break or structure. To have a break or structure, like price give us a market structure shift, we need price to give us what? To give us an impulsive move a little back and break structure to the downside. This how break or structure is. Remember, we have a market structure shift, all right, a market structure shift, and we need price to give us just a pullback. This is an impulsive move. We need price to dish us this impulsive move before this pullback. Now, this impulsive move here is called a correctional movement. So we need price to give us a correctional movement a little bit before giving us a pushback to the downside. So know how you do mark your break or structure, please. Know how you do mark your break or structure so that it won't lead you to loss in your trading. All right, so you can see this is just a rejection week. So this is a rejection week, and price do react from this supply zone which is here, and after the reaction from the supply zone, price also reacted from a demand zone on this rejection week. And after the demand zone, we have the internal structural break and also the major structural breaks. This is the major structural break from here. Remember, the buyers are active at this point. So the buyers are active at this point, and that is why price do not break below. Now, I wish price do break, like price do break below here. Yes, I'm going to say what? We have a break of structure to the downside, because you can see we have this impulsive move, right? So you can see how we have this impulsive move. This is an impulsive move. You can see how we have this impulsive move to the upside, this correctional movement, and how each price do break from here, from this week. I'm going to call it a break or structure. So at this point, this week rejection you are currently seeing here, all right? So this week rejection you are seeing here is not a break or structure. Please know how you do mark your break or structure. Please know how you do mark your break or structure. Now we have this break to the upside. I'm not going to call it a market structure shift, yes, because this is just a break or structure. And also, I want to also correct some things about that. Now we have price, we have this movement, right? So we have this movement, market structure shift, price do not break to the downside. So let me just say another break or structure to the downside. Now we expect another break or structure like this to continue the trend, right? But eventually price do not break this structure. Price do not break the structure. Before you know, price just move to the upside like this. Price tap a demand zone from there, right? And move to the upside like this. So I'm not going to call here as a break or structure. I'm not going to call here as a market structure shift because price do not break structure to the downside. I'm not going to call it a market structure shift. Either I'm going to call it a break because price do not break structure to the downside, alright? If price do break structure to the downside at this point, I'm going to use here as a market structure shift because price do break below the lower low, alright? But at this point, price do not break the swing low, so price reacted from a demand zone, alright? From a demand zone there, and I'm going to call this what? A break to the upside. But if price do clear out here up, now I'm going to call it a market structure shift because price do give us a break of structure to the downside at this point. So I hope you guys are understanding my point. Alright? So there are a lot of mistakes you guys make in marking out structures. You need to be careful when marking out structures. Now this is not a market structure shift yet because price do not break to the downside at this spot. This is not a market structure shift yet because price do not break at the downside at this spot. I need you to understand that, please. All right, so now you remember this is where price let's be going, please. All right, so we have another break to the upside. This is another break to the upside. This is a break or structure to the upside, and price do reacted from a demand zone, all right, and push to the upside. This is another break to the upside too, and another break to the upside, all right. So now many people which are looking to take trade from here, you can see how price has cleared its liquidity, has cleared its out. I'm coming, let me just mark this structure. And after that, we have a pure market structure shift to the downside. So this is a market structure shift. You can see it's a market structure shift. So after this market structure shift, you have another what? A break or structure. You can see what I'm saying, right? This is a break or structure. This is a break or structure. You can see after the market structure shift, price give us an impulsive move, just a little correctional move, and break structure to the downside. So that is how break or structure is. Not bringing weak rejection, please. That is not I cannot mark the structure with a weak rejection. That is not a break or structure to me. Please note that. All right, so we also have another break to the downside. We also have another break to the downside from this week. You can see price to give us some impulsive move before breaking to the downside. All right, that is a break or structure. Let's mark it out. The break or structure. Alright, so after this break or structure, now we have price has shifted what? Market, alright? Market structure shift at this point. This is the other block that really causes it, but I'm going to put it in this demand zone or either work with confirmation in that zone, alright? But price do take out liquidity from there. We have this break to the upside. we have this break to the upside. This is a break, so the upside. Liquidity, this is liquidity is sitting here, but price will clear it out. This is just a trend line liquidity, and this one is not even looking that much attractive, but to hold price, the other block. Alright, so once doing your top line analysis, you need to like identify another block which hold price. Right, so you need to identify another block which hold price, because like it's very necessary. Not all the block you see in the market is going to like hold price. Alright, so the price action pattern to this pair, you can see it's trend line liquidity and it's full of rejections on the buyers and the sellers. Alright, so price had to clear out liquidity from here, and also from here price clear out liquidity from this swing low. And before you know, as price will clear out liquidity, price would for it to the upside. Alright, so we have this internal break of structure to the upside. After price do clear as liquidity, internal break of structure to the upside. After that, we have this price do react from here, and this reaction here, price do give a lot of I think some price reacted from also from a fair value gap, which is currently like sitting here. Alright, so we also have a break of structure to the upside after the reaction. We also have another break to the upside at this point. Break to the upside at this point. Alright, so after that, price gave us a market structure shift. From here, there is a market structure shift, and also we had another break to the upside. And this supply zone. This is a supply zone in which many people want to sell from. You can see how price do get from that supply zone. Price do get from that supply zone and give a reaction. Alright, so after the reaction, price consolidates a little bit, struggling between the buyers and the seller at this point. Alright, so the struggles between the buyer and the seller at this point, you can say it, right? So now, before you know, price do clear as liquidity. You can see how price do clear out liquidity and break structure to the upside. Price break structure to the upside at this point, and price do tap in from the other block, which is currently like sitting here. Also price do break on our structure to the upside. And yeah, the funniest thing here is that people which are looking to like take trade from this other block here, before you know, price swept them out. Price swept them out, right? So price collected the orders, swept them out, swept everything below the lows from here. And you know one thing about something, when price is accumulating, price is getting what's liquidity, and we expect price to return back to those accumulation points to clear as liquidity from it, right? So you can see how price return and take out liquidity from it. And once you are planning to like take a trade from this other block, price is going to like take you out, but this is a demand zone in which price reacted to, and you can see this, you know, this other block here. You can see this other block here is in what, in inducement liquidity, and many people do take trade from there, and before you know, boom. Now you'll be looking at this other block because it has some inefficiencies in it, but also look below here, because all these candlestick you are seeing here, the candlesticks would also help to break structure, because price has accumulated and gather a lot of money before you know, price sweep out liquidity from here. We expect price to return back to also take out liquidity from here, alright, to also take out liquidity from here. And also, me personally, I will be looking at the lowest discount pricing array. Here is the lowest discount pricing array. This is the lowest discount pricing array. Although I'm going to miss the trade from here, but that is where my eye is going to like focus on, because that is where I do trade. Now I will be taking everything here around here as what liquidity. Yeah, you can see I will be taking everything around here as liquidity. So this is how I do trade. My stop loss is going to be like this another block. I'm going to use my long position too. All right, so my stop loss is going to be somewhere somewhere here, right? I'm just going to give a few pips like this, or I'm going to put it. I'm a person that love I don't love using tight stop loss, right? I don't love using tight stop loss. I always like reducing my what? I always like reducing my loss sizes and check my risk management. If my risk management is not compatible, I'm just going to leave the trade. I'm going to target this week rejection. All right, so this 3:1 ratio. Before you know, price boom, price tapping for me, boom to the upside. All right, so after my price has moved to the upside, giving us this break to the upside right here. Many people will soon be looking to like take a trade. This, remember, there's a break or structure. All right, many people looking to be taking a trade also in here, right? Me, there's a way I do trade after 1 or 2 touch points and price do not, especially these touch points, price do not return back from this other block. This is my point of interest, which I'm going to take this trade from. Since price do not return back to that there, I'm going to get out from that trade. All right, you can see how aggressive the candle is. When the candlestick is returning back, when the candlestick is returning, you can see also how aggressive the sellers is. In this case, is going to take out your stop loss. It's going to like take out your stop loss. And what happens here? You can see how price do take out stop loss here. You can see how price do take out the stop loss from here. All right, because the first and second touch points. The first touch point, and we're going to use it as inducement or general liquidity, and the second touch point. As the second, I need price to like take out what the first as liquidity. What I mean is this is very simple. What I mean is this very simple. Let me say we have this break to the upside, right? So I'll be using here as my point of interest. Now I do expect price to tap me in and move to the upside, like tap me in and move to the upside. But before then, I'll make sure that I identify what engineer liquidity sitting here or any form of liquidity sitting there. Now, if price, so that I'm going to mark it, oh, this is my liquidity point in which I want price to take out. For me personally, if there's no liquidity, I cannot take any trade place. So what I'm going to do after that is that I'll mark out my point of interest. So I expect price to tap me from here and move. Even though price is not moving in a straight line, even though price is not moving in a straight line, right? So price may move this way, but once it gets to my point of interest, I expect it to tap me and move. So once price return back here and just give me this move, right? I don't need price to move so much further. Like price may give me this move, clear out liquidity from here. So I need price to also return back. But if price no return back and price gave me this move like this, bro, I take out liquidity. All right. So I know price has also presented itself as what in an liquidity at this point, but I also need to be careful at this moment. All right. Also need to be careful at this moment. Now, sometimes price may do this before you know this is how many touch points, 1, 2 touch points. The next move here is going to like, even though price won't clear, sometimes price won't even clear out liquidity from this swing guy. Price will just going to like tap here. All right. So before you know, price is going to like take you out. That is how aggressive candlestick is in the market. All right, so you can see how price has taken out, and you can see how aggressive this candlestick is in the market, right? So these sellers are also aggressive, and you know the buyers are also aggressive in this point. All right, so after that we have another break to the downside. This is the break. This is a break of structure to the downside. All right, we also have this break to the downside. After this break of structure, if you know how to draw market structure very well, you are going to like enter the trade. So we also have a market structure shift at this point. We have this other block here. Can you see how price will tap me from that other block? and clear as liquidity. Let us check the risk to reward ratio at this point. Let's check the risk to reward ratio. Let's check the risk to reward ratio. Alright, so the risk to reward ratio of this trade from here, from this thing, let's see. Alright, the risk to reward ratio is just 2.3, which is a very nice trade. So anybody in which enter this trade from here is going to take out to risk to reward ratio 2.33. Alright, 2.33. Now, there's one thing I also notice. Alright, so you can say I do say to risk to reward ratio. That is the minimum risk to reward ratio you're supposed to take a particular trade. But some of you guys will be targeting the high or any price to return back to this side, any price to return back to this side. So I can sell from here. So I can take profit from there. You can see how price do take out. You are a scalper, you're a scalper. You know this is the lowest, the lower time frame, the LTF. So you need to be careful while scalping. Alright. So we also do have a break to the downside at this point. Now this is a break, right? So we expect price to tap from here, using here as what? Liquidity. Using here as liquidity. Alright. I'm going to use it as liquidity. We also have this break to the downside at this point. Alright, so we have this break or structure to the downside. We have this break or structure to the downside. This is a weak rejection. It's not a break or structure, right? So this is a weak rejection here. Please know how to mark out your break or structure. Now we have price to give us an MSS from here. This is an MSS. We also do have another break to the upside at this point. Alright. So now this is something you need to know. This is the lowest discount price in array, and this is inducement. Alright, this is an inducement. Any people will be looking to take a trade from here, and before you know, you can see how price will clear them out. Alright, you can see how price will clear them out. Now the purpose of backtesting is for you to know whether your confluence is working or not. That is the purpose of backtesting. Alright, the purpose of backtesting is to know whether your confluence is working or not. But you can see SMC confluence is working. Alright, it's a pure price action strategy. But if you don't know this, you'll be saying, oh, SMC is not working, other things. So SMC is working, but you need to follow the rules. You need to know liquidity, and liquidity is very much important. And if you want to know more about liquidity, you can join the upcoming advanced mentorship program 2.0. Right? So 2.0 is coming out. It's going to tell you more about what liquidity. Liquidity is everywhere in the market, so you really need to identify that so that you cannot stop that. I'm not going to say this. You may identify all those things in the charts, but sometimes the market is going to stop here. You may identify all those things in the charts. All right, liquidity. This is your point of interest. We have a break or structure to the upside. At this point, we have a liquidity which is being spotted. All right, your point of interest. Then put my long position here. Then my stop loss from the swing low. Before you know, price may go up, boom, and take you out. So sometimes it do fades, and sometimes it don't fade, but it works 70%. All right, it does work 70%. All right, so if you want to know about liquidity, you can join the program. All right, so right now, especially you need to really understand the discount pricing array and also the premium pricing array, because it's very important. So we have a break to the upside at this point. We have a break to the upside at this point. Now this other block you are currently like seeing here is carrying a lot of liquidity beneath it. All right, this is a liquidity, carry a lot of liquidity below it. All right, so we have another break to the upside. This is another break or structure to the upside. We also have another break or structure to the upside at this point. So this is another break or structure to the upside. Price is just moving so much aggressively to the upside. Alright, so we also have another break or structure to the upside. This is a break or structure to the upside. Alright, so now at this point, we saw how price, people taking trade from here. Remember, this is another block, right? It's people taking trade from here. Now, this makes this other block more high probability because it has taken out liquidity from here. Alright, it has taken out liquidity from this swing low, which is here. It makes this other block high probability. Before you know, price do react from here, boom. So this is a liquidity. This is a liquidity because many people are looking to take from this other block. Alright, but that is not the lowest discount price array. So let's use a Fibonacci retracement tool to check it. Alright, so this from this swing high to this swing low. Alright, you can see that is not the lowest discount price in array. That is not the lowest discount price in array. Alright, this is the lowest discount price in array other block. Now let's check the risk reward ratio of this trade. Let's check the risk reward ratio of this trade. Alright, let's use our long position tool. From here, from this from the point of interest, stop loss from this weak rejection, bring it below. Let's check. Alright, so the risk reward ratio of this trade is 2.48, which is a very nice ratio. Alright, so it's a very nice ratio. You can see our price start paying collect out liquidity from this swing guy. Alright, so after that, price do break structure to the downside. Price do break structure to the downside. Price also has to collect liquidity from the buy side. Alright, now we have a market structure shift. Alright, we have a market structure shift, and we also have another break or structure to the downside. Alright, so this is the last break or structure at this point. After that, price do give what MSS. Alright, you will see how backtesting is very, very much important. Once you are backtesting, you'll be identifying all those things in a chart, and it's going to help you a lot. So this is the other block, but price will not return back to that other block. Alright, so we have another break to the upside. This is a break to the upside, and we also have another break to the upside. Break to the upside. Alright, so don't think that just because the markets have this is the past market movement, I'm just looking at the charts because the market has played out. No, that's not how I trade, bro. The way I do trade is that I do identify liquidity. Alright, that's how I do trade. I'm not going to lie about it. You can see, how can I be taking trade from here and that is not the lowest discount price in array? How can I be taking trade from here and that is not the lowest discount price array? As those people in the mentorship program, if I ask those people in the mentorship program, they are going to show you how to trade. Alright, because I explain about liquidity concepts to them. Alright, I explain about liquidity concept to them. So you can see how price has tapped in from this other block and this a little move. Price do react from a demand zone, which is here. From this demand zone, price do react from there. Alright, since price do react from here, me personally, I'll be getting out from this trade from here because I'm seeing the seeing price going to the downside. Alright, so after that, this is the major break to the downside. Is the major break to the downside at this point. The major break or structure to the downside. Alright, so we also have this rejection, weak rejection at this point. This the last break. Now the last break of structure is equals to what? Liquidity. The last break of structure is equals to liquidity. We have a market structure shift from here. We have a market structure shift from here. And price do react from this other block which causes it. So price reacted from it and move to the upside. We also have another break of structure to the upside at this point. We also have another break of structure to the upside at this point. Alright. Price reacted from this other block and start consolidating before breaking to the downside. Alright, so and after that we have a break of structure to the downside. Then we have this other block which is going to sit here. But me, I'm not going to take trade from that other block because that other block is full of liquidity. So it's better for me to the other block is not attractive for me. Alright, I cannot take trade from that other block. I'm not going to lie about that. So we have this break to the downside also. We also have this break to the downside. Alright. So after that, we do have this. We do have price giving us a break of structure to the upside. We also have this break of structure to the upside. Price reacted from this other block which you are seeing here. Alright, so we also have a break to the upside at this point. Price will leave what's trend line liquidity at this point. Our price will clear it out, alright? So many people which are looking to buy from this other block which is here, this other block which is going to sit here. Price clear it out. Price will tap, give a little money, boom, price clear it out. Now we also have another break or structure to the downside at this point. It's a break or structure to the downside. Alright, so price will react from this supply zone. Price will react from that supply zone, move to the downside. And also, I think price also give a confirmation entry from here, a break to the downside. Price tap here from the supply zone here. And after that, we have another break to the downside at this point. So it's a break or structure to the downside. We also have another break or structure to the downside. Alright, we also have this break or structure to the downside. And we also have this break to the downside at this point. Also have another break to the downside. Alright, so we have a supply zone which is going to sit here. This is a supply zone. Alright, you can see our price will tap in from that supply zone. You can see our price will tap in from that supply zone. This is liquidity. This is liquidity if you don't know. Alright, price will tap. Boom, and move to the other side. Now, I want to ask you a question. Now, I need you to comment in the comment section. Do you think SMC strategy works or not? If SMC strategy not works or not, that is a big problem for you because you do not really understand how the concept really works. Alright, so boom to the downside. You can see our price tapping. We move to the downside sharply. Alright, so we have a break to the downside also. You have a supply zone which is going to sit in here. And what do you see? Price do tap in for that supply zone. Boom to the downside. So ask me, how do I know all these things, bro? Like, it's not something that I start learning today. All right, it's something that I go to the markets, always trade and identify. All right, so but now I need you to understand something also. We also have another array. We also have another premium pricing array, which is currently like sitting here. All right, which is currently like sitting here, and also you can also hear as liquidity. But price do react from this liquidity, this engineer liquidity. Price do react from there and give us a set of data. But me personally, I will be looking to buy from this premium array here, the highest premium array instead of here. But price do react from the lowest and move to the downside. So let's use a Fibonacci retracement tool from here, from this side to this. I'm coming from that side to this low. You can see this is not the highest premium pricing array. This is the highest premium pricing array. So price will react from the lowest premium pricing array and move to the other side. So essence is very simple. If you want to learn about liquidity concepts, you can DM me on WhatsApp. My WhatsApp number is there already. DM me on WhatsApp, then we talk about it. Alright, so since price has taken out liquidity from the buy side, everything now here is called what? The buy sell side liquidity. Right? Everything here is called the sell side liquidity. So we also need price to take out liquidity from here. So we need price to take out liquidity from here, from there. Alright, so now after that we have price gave us a market structure shifts from here. Market structure shifts. We have price taking out liquidity, which make price has taken out liquidity from here, which make this low a protected low for us to trade from. We can identify our liquidity, but price did not return back to that zone. Price did not give us any form of retracement. Alright, so we also have this break to the upside. This is a break to the upside, and price do react from this other demand zone, which is currently sitting here. Price still fall to the downside. Alright, so I'm going to use here as this is not trade. Price do not this low do not break down. I'm going to use here generally as the market structure shifts. Alright, so we also have a break to the downside, and also another break to the downside. And price do react from this supply zone. Now this supply zone take out liquidity from here. Alright, this also liquidity be confirmed. Before you know, price take out liquidity from here, from this swing low. Alright, so you can see how the market is moving. We also have another break to the downside at this point. This is a break to structure to the downside. We have the supply zone, which is here. Price do tap in from that supply zone. Alright, so we also have another break to the downside. This is another break or structure to the downside. This is a supply zone. Let me zoom out. Alright, this is the other block, which is going to like sitting. Let's see what price do. Alright, so price will clear out liquidity first, before you know price like take it out. But before then, let's check what the price did here. We have this break to the downside. We also have another break to the downside. Alright, now many people anticipating to take trade from this other block, because this is a liquidity, the price is moving to the outside. But before you know price takes them out. All right, so price do take them out at that spot. Now we have a market structure shift to the upside at this point. At this point, you have a market structure shift. This is the other block. Let me take this out. That's the last trade. We have a break to the upside. So we also have another break to the upside. Alright, so also have another break to the upside. Remember this demand zone here. We're watching to take trade from this demand zone. Let's see what our price do hold or not. Let's check it. Bam. What do you see, bro? Like, what do you see? You think SMC strategy will work or not? Do you think SMC strategy will work or not? Now, this is something you really need to be identifying in the market. It's not like, look at it, bro. Like, we have this liquidity here. You know that? This demand zone here, which you are seeing here, breaks structure to the upside. So we must wait for the demand zone to hit price. Remember, this is the lowest time frame buyer, so you need to be careful when us doing some things. But even though price do give us a market structure shift here, and price do tap in from this supply zone, move to the downside. All right. So you can see our price anticipated from this demand zone here and boom to the upside. So we have a market structure shift here again, because here is the lowest. This is the break or structure to the downside, and also have the last break to the downside. Break to the downside. This is a liquidity. I expect price to clear those liquidities. All right. Remember this, the demand zone. Let's check what our price will hold from this demand zone. You can see it's right. So I'm not forming anything. Bro. Just look at the charts. Look at the chart. Tell me whether SMC strategy works or not. Once you understand what you are doing, SMC strategy works. Right? The purpose of backtesting is to understand whether your strategy works or how you can get a win rate from it. Alright, so this is a liquidity in which we expect price to clear that. This is a liquidity, and price do clear those liquidity out. You cannot be taking a trade from here, from this leg, alright? You cannot be taking a trade from here. This, we expect price to tap it, and you can see how price tap from this demand zone. Now, what criteria do you think that make this demand zone to hold? First, we had a clear of liquidity. We have an inefficiency, which is here. We have many liquidities, which is and also the liquidity that is the reason why the demand zone hold, please. All right. What do you think happened next? You can see how price do tapping from the demand zone. Boom. What do you see? Trendline liquidity. So aggressive. This is liquidity, trendline liquidity. This is liquidity. So aggressive. And after that, the sellers came in, price tapping from the supply zone. I also have another liquidity. At this point, I'm not interested because of the structure. Please, markets, to trade a particular market, it depends on the structure, even though it's moving bullish. Alright, even though it's moving bullish. So I need you to know that. Alright, so we have a break to the upside at this point. This other block, price will react initially to what? Money on it. So we also have another point of interest, which is here. Let's see what price starting from there. Let's see what price are starting from there or not. So price do really tap in from that point of interest, and you can see how price do tap and move to the upside. So we have a market structure shifts. Other block, price don't miss it, but that is not the lowest discount pricing array. This is the lowest discount pricing array. I always tell you guys that you should always prioritize the lowest discount pricing array. on the highest premium pricing array. So we also have another break to the upside. Now we also have this break to the upside. Break to the upside. Alright, so let's check. Now, what happened? Let's check what happens. Boom, you can see it to the upside. You can see how the market move to the upside, bro. Like, you can see how the market move to the upside. Now, many people, I already tell you guys to like prioritize the lowest discount array. The lowest discount array used to hold price. The lowest discount array used to hold price. Alright, the lowest discount array used to hold price. You can see it's boom, the market moved to the upside at this point, using here as what? Liquidity. Inducement liquidity. Alright, so you can see it's patient pays a lot. This is a trend liquidity, and if like zoom in a little bit, we can see we have this break to the upside. Right, you also have another break to the upside. Now we have, I'm having this other block which is sitting here. Alright, you can see how the other block hold price and clearly touch the upside. I also have another break of structure. The other block here is not attractive to me. I'll go in place. Let me check. 1.3765. 1.3765. Alright, off some charts. I think. Alright, so we're almost like. I'm going to stop very soon. So you can see how price is moving aggressively to the upside, because the buy was so aggressive. So we also have price do give us a market structure shift from here. Alright, price reacted from an imbalance. Price give us an outward break to the downside at this point. Alright, we also have a break to the downside. Price reacts from here, and we also have a break to the downside. Alright, we also have another break to the downside. We also have another break. The price is just moving bearish. Break to the downside. We have another break to the downside. Always mind you, price is reacting from the other block that causes the structural. This is this other block. Alright. This is also another other block. You can see how price reacted from the other block. Here is the liquidity. Liquidity identified. Alright. We also have on our breakout structure to the downside. Alright, so also have this last breakout structure to the downside at this point. Alright, price do market structure shifts. This is the other block. Price don't miss it. Price don't miss. Price not tap us from that other block. Price reacted from a fair value gap. I'll move to the upside. We also have this break to the upside. Also have another break to the upside. So price is just breaking structure, missing the origins. We also have another break to the upside. So at this point, price will tapping from this other block. We also have another break to the upside. All right, I have break also to the upside. All right, so price is just moving, and this is just the recent price movement. All right, so it's better to take trade from this, or take trade from here. I look to take trade from here, but when price, I think price is just somewhere here. I'm coming. When price is just somewhere here. So the reason I don't want to take trade from this level again is that this accumulation, the accumulation is so much. All right, so this accumulation and price is going to gathering enough liquidity at that spot. So before you know, price is going to take me out at that spot, and what your point of interest here is going to be as liquidity. But I'm not going to take. It's better for me to work with confirmation, because at this point here right now, price is accumulating, taking out liquidity. Yeah, I do agree that you have a break to the upside here, but you can see the consolidation, how the candlestick is not attractive. One thing you need to also understand that once you're taking a trade, you need to check the candlesticks. You need to check how the candlesticks is, because it's very, very important. All right. So price action is very, very important, please. Price action. So the price action of this trade this time, I don't really like it. Right. Now this other block here, price cleared out liquidity, tapping, and that is what is dishing this move. That's what is dishing this move right now. Right? That's what is dishing this move. But I'm not going to tell you that price can't hold here. Price we have this liquidity being identified, which is here. But price may tap in, and you don't need to target the high again. Just take out to ratio. If you really want to take a trade, just take out to ratio at this point. All right, so at this point, I'll be stopping here. As I said to you guys, that the mentorship program, advanced mentorship program, is going to commence. Registration is going to start on 31st of this month. All right, and also I needed to understand something about trading. As I said, trading is not an easy stuff, but it's not. You make sure you identify all things in the market, your liquidity, everything must be intact in the market. All right, everything must be intact in the market, especially how to read price action. Once you don't know how to read price action, please try your possible best to learn how to read price action. Price action, market structure, liquidity, directional bias, what you need, and also what fundamental analysis. All right, so I also say that this is the part 4 of how to backtest your chart. You can watch out for part 1, part 2, and also part 3, because I'll be trying my possible best to continue this series, because I know it's going to really help you a lot. All right, and also if you think, as I say, the purpose of backtesting is to check whether your strategy works, because once the past market movements cannot lie for us. All right, so the past market movements can never lie to us. All right, so once you check all your SMC complexes, once you go to a particular pair and check your SSM complexes, check whether price do respect the other blocks. If you are taking trade with another block, try to understand whether price do respect the fair value gap if you are taking trade with a fair value gap. Now, it all depends on your entry models. If price is respecting another block, you know that SMC works, because that is what you believe on. Or if price is respecting a fair value gap, you know that price is respecting a fair value gap. That is the purpose of backtesting your chart. All right, so and that's why I always say to you guys that Saturdays are not meant for trading. Saturdays are meant for backtesting. Backtest your losses, backtest your wins, what makes you to win, and what makes you to lose this trade. All right, so I need you to understand that is the purpose and also the importance of backtesting. All right, so in anything you do in business, you must check your profits, you must also check your losses, you must also backtest to understand whether the this particular commodity or pair is respecting my rules or not. All right, most important thing I also want you to understand is that you must follow your rules, you must follow those things that you put. All right, and also make sure that your risk management, make sure you also follow your risk management strategy. All right, once you follow your risk management strategy, it's not going to affect your psychology. That is just a key hack about that. All right, so I'll be stopping here at this point. So all right, so if you want to join the mentorship program, the advanced mentorship program 2.0 coming out, it's just 2 months mentorship program straight, and the entry fee to that program is just $15. All right, it's just $15, the entry fee. You will see my WhatsApp number on the description, in my description of my channel. You see my WhatsApp number there. All right, only chat me. Please stay away from scam. Please try your possible best to carry God along in everything you are doing. So I'm going to stop here at this point. Shalom.